We have many cryptocurrencies, the chief of which is Bitcoin, armed with cryptographic techniques and acting as an efficient peer-to-peer payment protocol. However, the way blockchains like that of Bitcoin works means that their mode of operation gradually slows down as adoption increases, which makes them victims of their own success and reduces accessibility to users. Hence, users are forced to deal with Bitcoin through centralized platforms and intermediaries, which ultimately defeats the purpose of decentralization. In this video, we'll look at how Mina protocol has exceeded the limitations of Bitcoin and other cryptocurrencies. What is Mina protocol? Mina protocol is the ultimate solution to the problems of scalability that await some of the notable cryptocurrencies out there. The project was first called Coda Protocol before changing its name to Mina Protocol in 2020. It uses recursive SK snarks, which stand for Zero Knowledge, Succinct, Non-Interactive Arguments of Knowledge, to verify the tampered evidence of any blockchain's transaction history ledger. Instead of having each network participant verify the history of transactions for themselves, the network automatically produces proof of correctness for the transaction information and guarantees that the ledger is accurate. The Mina protocol provides easily verifiable proof for each transaction block and saves time verifying and adding blocks to the blockchain. How transactions happen on Mina protocol. Other blockchains have two significant roles that participants play. They require people who verify every transaction in the network, such as stakers, miners, or full nodes. The secondary role comprises those who rely on third-party agents, such as centralized exchanges, to verify transactions for them. The class of participants is often referred to as light clients. Light clients exist because the protocol tends to enlarge and grow out of proportion. It becomes expensive to be a stakeholder, miner, or full node and be eligible to verify transactions. Bitcoin generates 1.5 transactions per second, and the requirement for miners is steep. Each miner must verify around 500 million transactions to be considered a full node. This presents an even more significant challenge for cryptocurrencies that suggest that they can verify 10 times or 100,000 times more transactions per second of Bitcoin. They generate terabytes of data every week at their peak. Mina protocol provides a system for users to verify with just a tiny SK snark. Users can use SK snarks in many ways. The first is as a verifier. Verifiers must download the bite-sized SK snarks to become full node security. Blockchain producers are the second group of operators on the Mina chain. You can refer to them as miners or stakers as they apply to other cryptocurrencies. Their activities are incentivized via Mina's reward distribution system. They earn from block rewards, coin-based transactions, and user transaction fees. Block producers operate within the confines of what Mina's Ouroboros consensus allows. It shares the same consensus with the Cardano network. Users can delegate their stake to another producer in the system. A block producer selects valid transactions to add to the next block. They all strive to add to the highest fee transaction to the block. To do this in the shortest time possible, they must snark several previously added transactions. Snarking is the primary condition determining if the new transactions bear similar parameters to the initial transactions added to the blocks. Other nodes are liable to reject the transaction if it doesn't meet this requirement. Block producers must either reproduce their own snarks or select them from a marketplace of existing snarks created by a group of nodes called snarkers. These are the people that actually produce the bite-sized ZK snarks used by block producers to verify transactions. They get compensated with posting fees from block producers who buy ZK snarks from the marketplace. When a block producer uses snarks, a snarker gets paid from the total transaction fees. The snarking system is at the center of the Mina protocol's function. It's predicted to outgrow the Bitcoin mining system, which has become restricted to the few who can afford to participate. Another critical attribute of this network is its censorship resistance. Not everyone can access Bitcoin's blocks if you have a large enough fee. Mina may be similar to Bitcoin because you need to add a snark to every transaction before it can be included in the block. However, it's not nearly as expensive as Bitcoin. In the absence of a snark, a transaction can only be verified if all the snarkers or all the block producers collude as a government to allow or disallow the addition of a snark or the transaction to the block. Ultimately, snarking is easily accessible to users due to its meager computational cost, and that's why there can be so many snarkers to deal with. It can be challenging to get them all to agree on adding a snark, unlike block producers. However, it only takes one snarker to get a transaction going, and a block producer can earn profits from including the snark transaction even at lower fees. We can summarize the block producer's operations as someone who stakes Mina and is chosen to produce a block. They then select the cheapest snark bids and add them to unsnarked transactions. Block producers earn transaction fees, pay the snarkers, and earn block rewards. The snarker sets a bid to sell snark at a competitive rate and earns the amount included in the bid if their snark is chosen. Benefits of Mina Protocol. Using ZK Snarks makes Mina Protocol a much faster alternative to other blockchains. The whole process of the snarks is like someone taking a snap of the blockchain and sending it around. When a new block is created, it takes a snapshot. The new snapshot serves as the background of the previous state of the block while still maintaining the same size for all its snapshots. The CEO of Mina Protocol, Evan Shapiro, and his team have designed it to provide end-to-end data privacy for businesses and individuals, whether online or on-chain. The on-chain services available on the Mina Protocol don't affect the privacy of its users' information. It helps data service providers to operate with zero data vulnerabilities. ZK Snarks also helps developers to access verified real-world data from any platform to build useful decentralized apps. They don't need permission to access publicly available information. And the use and protection of any sensitive data can be executed with the provision of relevant proof. With the Mina Protocol, there is no need for custom API integrations from random websites or oracles. The protocol can also help users to browse the internet in a more private way and without restriction. They don't have to give their personal data or login details, which a service provider may use to censor them. This option can also be integrated into dApps created by developers on the chain. Mina Tokenomics. As you guessed already, the Mina token is central to the operations of every participant within the network. Mina is the native cryptocurrency of the Mina platform. Mina works as a utility crypto of the protocol and payment and exchange of funds. Each individual unit of the coin is called a Mina. At launch, there was an individual supply of about 1 billion, and every year they release 2.2 billion Mina tokens into the application with an inflation rate of about 12%. This is expected to drop to 7% and 1.2 billion Mina inflation for years after the project's launch. The additional inflation will be used to supplement the reward distribution system. Users of Mina can buy the currency in Centimina, 0.01 Mina, just like the cent is to the dollar. Given that the Mina protocol uses a variation of Cardano's or Aborov's proof of stake, participants must take Mina tokens and earn rewards in the form of the same tokens. The number of blocks the network produces determines the number of block rewards. For instance, if only about 50% of the network stakes their tokens, the block rewards will be doubled for block producers. Mina's price history. The Mina token has enjoyed some good time in the sun by trading for the last 2 years at an average price of $1.20 per Mina. During this period, it achieved its highest and lowest valuation as observed at the recording time. In 2021, Mina Protocol joined the comprehensive bullish move of the crypto market to hit $9.91, which is its all-time high price to date. It would later fall to $3.82 towards the end of 2021. The following year was a continuation of the downturn in the crypto market, with Bitcoin suffering a significant crash. Its price fell to around $1.57 in February 2022 as the bears further crashed the market. Mina Protocol picked up in adoption at this time, but due to the market conditions, its price could only rise briefly to trade at $2.72 in March 2022. The rest of the year didn't show improved performance, and at the start of this year, we had Mina trading at 54 cents and 52 cents at the time of the recording. The market is stabilizing even now, and Mina is gathering momentum for significant price growth with all the accumulated fundamentals from its unique technology. What can we expect from the Mina project? The world's lightest blockchain recently launched a decentralized application for businesses and startups. The app is ZK Ignite, a business development D-app that offers excellent opportunities to builders, reviewers, and other expert developers. Users will have access to many lucrative benefits, such as being a part of a large grant pool. Those with the brightest ideas for products and services may secure substantial VC funding for their businesses. The protocol now has a new voting system installed to aid the governance of the network and further aid in its commitment to decentralization. Earlier in January 2023, the community of MENA announced the blossoming relationship with Marco DiMaggio, who has now joined as a member of the MENA Foundation board. Marco used to be the director of Harvard's FinTech, Crypto, and Web3 Lab, and his experience will help to bring more positive change to the MENA ecosystem. All these will establish the MENA protocol as one of the best performing cryptocurrencies of 2023 if the market resumes a typical bull run. Thanks for watching the video. I hope you enjoyed it, and I really hope you learned something. Remember to like and subscribe, and I'll catch you in the next one.